Hey guys, Anthony Peluso here, founder and CEO of Wealth for Life, and welcome to another webinar event this Wednesday, 29th of April 2020, a year that I'm sure none of us will forget, certainly a year like no other. There's a lot going on in our industry right now. The changes keep coming. It's getting harder to keep up with everything that our government and certain sectors of our industry are looking to implement or at least toy with. Today, we were looking at stamp duty and how the Australian government is looking to abolish stamp duty, I think, for homeowners and replace it with a nice cheeky land tax annual fee. So I looked at that today and I thought, well, they're taking this with this hand and giving it back to us with this hand. But there's the point I'm trying to make. There's a lot of change that our government are looking at right now with regards to the current economic climate we're in and the industries that this is affecting. So tonight's webinar is all about recapping some of the expert commentary in the areas of finance and mortgages, accounting and taxation, and building and construction. And I'm still a believer that, our country over the last 30 years has done very, very well economically, and it's really placed us in a strong position to come out of this much, much stronger. And, I'm very optimistic. I see a lot of the figures out there that don't support a lot of the hysteria that's going around still. So we're certainly seeing a level of normality come back into our environment. More cars on the road, more retailers starting to open their doors, cafes. And I'm all for that. Obviously we need to still act socially responsible. But I certainly see things getting better. So without any further ado, I'm going to hand you now over to John Trainer to talk to you about taxation and accounting, Paz Garofalo in the area of building and construction, and Travis McLaughlin in the area of finance and mortgages. And, I work, almost hand in hand with you and, and it's not just, yourself here, but the whole industry right now. It's like I've always said, this no one has gone unaffected here, but What's the message? What's the message that the banks are putting out into the marketplace right now?
Look, the banks are open for business. That's the message they're sending loud and clear, is that they are very much still open for business. But at the same time, there's the compassionate side to the banks, that the banks are there to help you if you need it. So from an open for business perspective, I think the banks are trying to make clear that this is not a credit crunch, this is an income crunch.
Yep.
So what that means is that we're just doing a lot more verification of income that you're earning. What industries are you working in? Or have your hours been cut?
Yep.
Things like that. So there's a lot more detail that's going into that type of thing. From a compassionate perspective, all of the government stimulus packages that you hear about, you can phone your bank up and you can get a reduced interest rate. You can get deferral of payments. You can pause those payments. Most of the lenders are happy to work with you to try and, suit your position.
Yeah. I mean, that's the one thing to remember with banks, because sometimes we see them as the unnecessary evil, right? But they play the biggest part in the investment game. They play the biggest part when it comes to buying your own home. And people forget that. They are your partner. If you look at it, it's like you take any business, right? They're putting up 80% of the cost, right, of the collateral into the business, into the partnership. They need to be, you need to work with them, okay?
Absolutely.
They play an important part. And I found them to not, even prior to the existing, economic climate we're in, I found them to be very reasonable, very understanding. The key thing and the message I keep pushing out to everybody is communication.
Yeah.
You've got to communicate with your suppliers, with your vendors, with your banks, with the people that you're doing business with. But it's certainly an income crunch as opposed to a credit crunch. But tell me, what are some of the industries right now that banks are keeping their eye on?
So your industries where there's a lot of employees that have been stood down. So typically your tourism industries, your hospitality industries, retail industries, and other industries like that are, there's a couple of lenders that have specifically named those industries out in what they call temporary policy. And other banks are just rather having a little bit of a look at it as opposed to, naming it out in policy per se.
Yeah.
But they really want to make sure that you're still earning what you are earning, and make sure that that's not something that's going to be cut in the near future. So more to that, it's also, you might get an approval, but then the banks are going to have a look before settlement if you actually are still earning that money, and if things have been cut again.
Sure. So what's the message that you give out to some of these industries that are doing it a little bit tougher right now? What would you say to the people in those industries?
Hang tight. Things are going to change. Things are going to get better. The banks are there to help you. If you've got a current mortgage, get on the phone to your lenders, whoever that is at the moment. Make sure you're getting rock bottom rates. The banks are there to help you do that. If you've lost your job and you've got job seeker payments, the banks are helping you helping you along with that.
Yep.
They're allowing you to defer your payments for up to 6 months. Some lenders are working on a 3 month plus 3 month basis. So in other words, they check in on 3 months to see if you're still without work. Others are just giving you 6 months straight up front. So it varies from lender to lender. For me to say to you that this is the cast in stone policy is a bit difficult. But certainly if you're doing it tough at the moment, the first thing you should be doing is getting on the phone to your lender and getting that support from them, because it's just going to make your life easier going in for the long run. Bear in mind though, as we discussed a little bit earlier, it's really only break the glass in case of emergency situation, because you do need to bear in mind that whilst you get deferral on payments or paused payments, that interest is going to be capitalized back onto your loan. So it's not free. You will have to pay it in the end, but you're just going to have to pay it at a later stage.
Sure.
So keep that in mind when you are doing that, because you don't want that to come back and bite you.
Yeah, and I think that's a very important message out there, because there has been some confusion. People are thinking, hey, the bank's just going to come in and be the savior here and halt my repayments for 6 months. Well, no, they're not. They're just putting they're putting them on a freeze, but you're going to have to not only pick up the repayments 6 months' time, but the loan will be bigger because of the interest that's capitalised. So very important message. What about the delays that you're finding with banks right now? Because there's two schools of thought here. Like, interest rates are at an all-time low. They haven't been this low for 69 years, okay? So I certainly agree with you that banks are open for business. Just, if you have a look at the headlines in the marketplace and they're leading with interest rates as the headline, that tells you they're open for business. And the Reserve Bank of Australia has kicked in, I think, with a $90 billion package for the banks to ensure that they've got plenty of credit to help out. But they are experiencing some massive delays. Tell me a little bit more about that, Travis.
Absolutely. I mean, look, anytime you lower interest rates to where we are at the moment, you're going to get a rush on mortgages. So what we're looking at the moment is we're looking at extremely high volumes of new mortgage applications going through the system. I think it was AFG and Connective announced the other day that they've had one of their record months for a number of applications through.
AFG and Connective being, you want to explain who they are?
Sorry, aggregators that allow brokers to deal with the market. So when brokers put deals through to the banks, they put them through their aggregator, and those as a complete aggregation, as a whole, through the broker market, we're seeing some record numbers going through to the lenders. So what that does is it just fills the funnel up from the top, and the banks only have so many employees. And apart from only having so many employees, we're also dealing with COVID at the moment, which means that a lot of these employees are working from home or working from remote sites. So like everybody in the industry, we're learning how to do this, and we're learning how to get better at it. And the banks are getting better at it. Some banks are a lot better at it than other banks. Some banks have been doing it for a long time already. So they'll naturally survive better or thrive better in this current market. But it's certainly, it's the number of volume and applications that are going through the market at the moment is extremely high. So from that perspective alone, there's delays in the system.
Yeah, and obviously that's I'm hearing of up to 2 hour, 3 hour wait times when you're on the phone to the bank. Tell me, would you recommend that a purchaser or somebody that's looking to get finance or refinance go directly to the bank or use a mortgage broker?
look, using a mortgage broker gives you a better lay of the field. So you're going to get more options in the market. If you go direct to a bank, the only thing that a bank can offer you is their products. Whereas if you go to a mortgage broker, you may be able to get a rate that's slightly different because of a particular industry you might work in, or there's something within your financial situation that is unique. And there are certain lenders that handle those types of unique situations with financial needs. So going to a broker definitely is an advantage in terms of shopping the market, because you're able to go for your own personal circumstances, what's going to be the most suitable loan for you in your personal circumstances. So definitely a broker from that perspective, absolutely.
Yeah, excellent. And the one question we get asked all the time is interest rates, right? It's the first thing people think of when talking to a bank, right?
Yeah.
Tell me what you're seeing at the moment in the marketplace, Travis, with regards to interest rates, but more importantly, what else comes with those interest rates? Because we all know that nothing's for free.
Yeah.
Okay.
So what I'm seeing in the market at the moment is that a lot of the banks are offering great rates. I mean, as you said earlier, the best rates in the market that we've seen for probably in our lifetimes. Yeah. But that comes at a cost in terms of they're wanting you to fix your rates. And they're wanting most of the good rates in the market at the moment are being fixed between 2 and 3 years, which is also not a bad thing given the low level of the rates that we're seeing at the moment. So to fix your loan for 2 to 3 years, it's just rather understanding that and making sure that you're completely aware of how a fixed loan actually operates.
And what the implications
are.
And
what the implications are, a little bit down the line. So for instance, next year, if you want to go and refinance and draw some equity out, you're going to have to pay some break cost fees on that. And if you don't plan ahead for that, it can be costly. But, in 90% of the population, if you're just having an owner-occupied home, there's nothing wrong with fixing that, especially for 2 years and having that certainty, particularly in the times at the moment.
Yeah.
Mate, we get straight to the heart of it. Small businesses, obviously employers and employees. The big question, I suppose, or that big, uncertainty for a lot of people is employment, right? Yeah. Tell us about, what the government's doing right now with regards to stimulus packages for employees.
Yeah, so for employees, there's really been three things. So there's the JobKeeper package, which has been released. Now that package is aimed at employees, but it comes from employers. So it's your employer that's got to register for JobKeeper. And as long as they've had a 30% reduction in turnover, then their employees are eligible, which means you as an employee could be eligible for $1,500 per fortnight of assistance. Mm-hmm. Now that eligibility means that business or your employer needs to have had a 30% drop in turnover.
Yeah. Right.
Now, for some people, that $1,500 will be a subsidy to their employer. So let's say they're getting $3,000 a fortnight in pay. Their employer may be getting $1,500 towards subsidising their pay so they can maintain the $3,000.
Yeah.
Your business may have been stood down. So you as a worker have been stood down and your employer wants to continue to engage you. And then you will be getting $1,500 just for sitting at home.
Yeah.
And then you've got the scenarios which are in between that. So let's say you're getting $1,000 a fortnight now working, the government will top that up so that you are getting $1,500 through this COVID-19 period.
And the requirement for that, the criteria is that the employer needs to have shown a drop in 30% of turnover.
Correct, but you're really reliant on your employer to register for that assistance. If they, the thing to remember for them is they've got to cash flow it, so it's a payment in arrears.
Yeah.
So your employer, if they don't have the funds to continue to pay you $1,500 a fortnight because their business has been shut down, you're not going to be eligible for that JobKeeper payment. And then you move to the Job Seeker payment, which is funneled through Centrelink.
And tell us a little bit about that one, John.
So Job Seeker is where you can't get JobKeeper and Job Seeker. So Job Seeker is what is administrated through Centrelink, or your MyGov account.
Yep.
And that's it's formally the dole, basically. So it's your unemployment payments.
Yeah.
Now, if you're eligible for that because you've got no income, you're going to get $565 per fortnight. So it's a fair bit less than the $1,500.
Correct.
But the government are topping that up with an extra $550 coronavirus supplement payment.
On top
So
of
you'll
the
effectively be on, correct. So you'll effectively be on $1,100 per fortnight rather than the $1,500 you would have been on under the JobKeeper package. Now, on top of that, they've got two other payments of $750 that they're going to release every quarter. So you'll get your $565, your $550 coronavirus supplement payment every fortnight.
Yeah.
And then once every 3 months, you'll get an additional $750.
Okay, so how are you finding that in the marketplace, like with regard, how are you finding employee, or is it too early to tell in terms of responding to that?
Well, before the JobKeeper announcement, what we saw was huge amounts of lines in Centrelink of everyone trying to get their government assistance. So those lines seem to have shortened since the JobKeeper announcement was announced. And I guess we're dealing more at the employer level, and the employers are trying to keep their workers engaged. So they're trying to find a way to get into that JobKeeper package, so that they can keep their workers. But unfortunately, some businesses just can't cash flow that $1,500 payment if they've got no revenue.
Yeah, of course. Which brings about to employers. So what's the government done for? I mean, I'm well across it, obviously, from a business perspective, but maybe you shed some light on what the government, some of the stimulus packages they've put aside for employers and how they differ.
So JobKeeper's an employer package, but aimed at retaining employees.
Yeah.
The other big thing that they've introduced is this cash boost payment, which is effectively, it's a refund of your pay-as-you-go installment. So the tax you're withholding from your workers for the 6 months from January 1, 2020. So that's capped at $100,000, and it's got a minimum of $20,000 on that payment. And it's based on the withholding that you've taken from your workers in that 6 month period.
Yeah.
So we're seeing that as a real boost for employers to give them some cash flow, but it's not really going to keep them, retaining you if you're an employee.
Yeah. Okay, got it. Well, okay, yeah, that's interesting. What about from an ATO? Like, how's their response? How do you find their response being, other than what you just mentioned?
Yeah, so that's one of the. I guess there's been other stimuluses which flow around that from state government. With if you're in Victoria, there's a $10,000 government payment which you can receive if you are a impacted business. So your cafes, gyms, real estate agents fall into that category.
Yeah.
And they're also giving some payroll tax relief for those employers with turnover more than 650,000. So state government have got a package. You've got the federal package being the JobKeeper and the cash boost. And then on top of that, the ATO are extending payment plans, deferring payment of lodgements. So you still need to lodge your BASs and your tax returns, but they're extending those payment dates by 4 months, and also looking to extend payment terms. So maybe long-term payment plans with businesses, with individuals who have got debt, to see them through this COVID-19 situation.
Yeah, and that's an important point, John, because there's a misconception in the marketplace that the ATO are actually cancelling them or deleting them, which is not the case. It's basically kicking the can down the road and deferring it for a period of time. Correct. Yeah. Correct. Good. Now, tell me, in the area of superannuation, I know there's been some relief that's been offered via superannuation. You want to share a little bit about that?
Yeah, so we're seeing the super as the last option. I'm not a financial planner, so obviously can't advise on whether you should or shouldn't take out the 10K, so I'll caveat there. But if you've lost your job or had a 20% reduction in income, then you're eligible for it's a $10,000 payment which you can withdraw out of your superannuation before 30 June 2020. And there's another $10,000 payment which you can draw post 1 July.
Yeah.
Now, to get access to that payment, you've got to apply through your MyGov account. But we're seeing that as the last option. If you've done your budget and you know your income's been hit, and you don't see another position where you're going to get your hands on capital, e.g., you can't reinvent yourself to get another job because it's pretty tough to get a job at the moment. I think you go to your banks first, and I don't know, you may touch on that in terms of your bank's your friend at the moment.
Absolutely.
And getting repayment holidays.
Yeah.
Similar to the ATO, they're not wiping your mortgage, but they're still going to charge you the interest. They're going to capitalise that.
Correct.
But the bank's your friend at the moment in that never before have I heard of them putting a stop on repayments and saying, hey guys, you don't need to pay me for 6 months.
Mate. But that's what I said. Like, even banks haven't been immune to what's going on right now. You know, the Reserve Bank of Australia is offering 90 billion right now to banks, and even more if the banks are seen to be lending to small businesses. So, you know, everyone's in this together, and I think the great thing that's come out of this is that we are all supporting each other. You know, no one's going rogue and saying, "Hey, screw you," I'm going to go after you or anything like that. It's an incredible thing as you know, as humans, that we're all, you know, it has affected everyone. No one's been immune to this, and banks are doing their bit. The ATO is doing their bit. The government's been fantastic. You know, landlords, we deal with a lot of landlords, and I know overnight, I think the New South Wales government introduced a rental stimulus package of around $40 million. We're waiting for something to happen in Victoria right now, so we're advising a lot of our clients on that. But you know, it's good to see that everyone's supporting each other. Now, from your perspective, John, what are you telling? You know, you get a lot of business owners, right, that will come to you. And, you know, what do you tell them to do? What should they be doing during these times?
So the boring stuff, so we go back to being an accountant, but a budget becomes, you know, almost number one here. So, you know, what are your expenses and what's your income? And then, you know, going through that expense line to saying, hey, do I need all this, you know, gym memberships? You probably don't need them at the moment. What are the other costs you can cut of that discretionary spend? And then from there, working out what are your essential costs, and then either speaking to your landlord, your bank, your utilities company, whatever, to try to get some relief from those costs in the short term. So once you've handled your costs and you've got a fair grip on what that number is, it's then about what income can you bring in? So can you reinvent yourself to get some income in? Can you change your career? Can you go into something that's deemed essential? If you can, great. If you can't, you're looking at, you know, JobKeeper. Is my employer eligible for that? Can I get that? Or the job seeker payments?
Yeah. Wow. Yeah. Excellent. And because you're saying earlier on, you tend to specialize more with the small, medium enterprise sector of the market, right?
Correct.
I mean, like I always had the view that those guys really underpin our economy and are the lifeblood of this country. So, do you see anything else, John, that you know, I know nobody's got a crystal ball, but are you looking at what else the government and, you know, the ATO are looking to do if something further is needed down the track, if this continues?
Well, this JobKeeper package is, you know, it's huge. So we talk about, we're going to be probably having another chat in hopefully 12 months time, working out what taxes have been introduced to try to pay all this back. But the JobKeeper is going for 6 months. So the queries that we're fielding at the moment is what defines that 30% drop in revenue for that business to be eligible. Because you've got a lot of different businesses in terms of defining that 30% drop. You may be 30% up on last year, but 30% down based on February because you've got a growing business. So all of the queries from clients is rounding that 30% and what that means. And we're still waiting for some legislation, some guidance from government regarding what that's going to be. Now, if businesses are getting that for a 6-month period, I think that gives you a fair idea of where the government's seeing the economy going, that they're prepared to back that package in for 6 months. And I guess our hope is that it's, you know, we're in a better spot in 6 months, but the reality is we may not be, and would expect some further government measures to probably try to get us spending some money, because at the moment I'm talking about saving money and preserving cash flow and bringing in income so you can survive.
Yeah.
Well, the government want us spending money, so they're giving away this money so we spend it, and on the back end of this they're going to be wanting us to continue to spend money. So I'm expecting packages around us buying assets and similar stuff that's happened post GFC.
And that's the thing, mate. I've always said, you can never ever save your way out of anything. You can't save your way to financial well-being. You can't save your way to wealth. It's a part of the equation that needs to get confronted and addressed. But, as a country, we need to spend, we need to produce, we need to get products out into the marketplace. And for anybody to get through this, we've all got to go out there and look at our revenue, how we can add to our revenue. And more importantly, look at new lines right now, revenue lines that probably weren't on our radar 3 months ago.
Yeah. Yeah.
So, excellent.
Mate, another question I've got for you, which gets asked by a lot of my clients, is building materials.
Sure.
Okay. Yep. So, everything's, you've got a really cool supply chain, which I understand, but you depend, like most businesses, on your distribution,
sure.
your supply, and that's all over the world. So how does that get affected in the current space?
There's probably two answers to that question there, Anthony. The first one is, you'd be surprised how much Australian building, residential home building, is made in Australia. We forget this, and I think if I can applaud anybody to keep on going, if they can buy the home, don't fear it, go ahead with it, because it does save jobs.
Yeah.
It puts money into the economy.
Good point.
That's my little plug, yes, I'm like some sales out there. But at the end of the day, our concrete's made here, our cement is made here, our reinforcement's made here, the timber is made here, bricks, roof tiles are all made here.
Yeah.
Aluminium and glass are both sourced locally.
Right.
So you'll find plasterboard is made locally.
Mm.
The things that we do get from China, and China was probably the hardest hit by all means, is plumbing fixtures and some type of glassware.
And that's a direct relationship, or you're going through a third-party supply? Like
third-party supplier. Yeah, I still buy locally. So what happens there? Housing will not be, our supply chain housing will not be affected. I can't say for my counterparts in commercial world, because a lot of the curtain walls from apartments do come from China, which makes it a little bit tougher for them. But I can only talk from our domestic builds. We won't be affected by supply chain problems, that's for sure, because like I said, we make everything locally and we're supporting jobs.
Yeah, that's phenomenal, All right, mate, so mate, wrapping up, where do you see, again, the construction industry is like the third biggest industry in Australia next to retail and healthcare, right? And it makes up for so many jobs. And, I always, the rate, the figure I'm looking at the most right now is the unemployment rate.
Completely.
Okay, it pretty much will determine everybody's next move, right? So from your perspective, where do you see the market from a builder's viewpoint, right? Where do you actually see the market in the next 12 months?
So, I think once we come out of this, I think it's just going to become boom again. I'll be really honest.
Yeah.
I think the rebound will take a little bit of time to get used to. I think the rebound will be shorter than people are predicting.
Yeah.
If you look at what happened between Royal Commission, and that was as late as last year, to the election, and then you saw the hive activity that happened after that.
Yeah.
I think us Australians are quite resilient.
Absolutely.
The fundamentals are really, really good still.
Yeah.
i.e. low interest rates. Lowest ever in the history of finance.
Yeah.
Housing prices are taking a hit now, but it's understandable because of you can't get together and buy anything, or you can't auction. So I take that as that's not fair to the property market. The stock market has a different bearing to what we do in housing.
Yeah, absolutely.
So we don't get together and buy stocks. you buy stocks online, so there should be no effect of COVID-19.
Mm.
So that's a bit of for me, is a lot more volatile. So I think prices will stay at bay. I think people will rebound pretty quickly from this.
Yeah.
And I think, it'll be just as usual. Hopefully the curve stops turning up and turning down.
Yeah.
And then a bit more confidence will go back into people in work. So, I agree with you in terms of job losses. But as fast as they'll close, I'm pretty sure when people start be able to get back out again, they'll smash it again. I think they'll start. I'm going to book myself to a restaurant for the next 5 weeks, I reckon, because sitting at home and eating all the time isn't good for me. But
man.
I think that type of positivity, I think Australians love it. So I think it's what we're part of.
Mate, I have to agree. Like speaking to a lot of investors and the guys at the top end of town, they're pent up, right? They're cashed up. They're ready.
Yep.
They're ready. As soon as these restrictions are removed, these guys are ready because, like yourself, interest rates are at an all-time low. The property market has been doing well, even up to last week. I'd like to think that there's a bit of a pause on the market right now, similar to the federal election before, I think, the 18th of May last year, where people were sitting on their bums doing nothing. The minute that it got announced, who was going to be staying in power, bang, I remember that following Monday, the phone calls I'm starting to get, the reports were starting to come through, and the positivity and optimistic in the marketplace.
I share that same way of thought process with this as well.
Yeah. Yeah.
I think once we stop stage 3 and go back to stage 2 and stage 1, however they decide to pull back, you'll find that the shackles are off and we're going back to business again. Yeah,
I'm with you, mate. I think once we get back out there, this will bounce very sharply. You'll start to see prices really go off because, for the guys that are in the right industry and the guys that can hold their jobs and that are cashed up, money's cheap right now. People are still looking for homes, for a roof over their head, and investment, as we've seen for the last 60 years that we're studying the market. It's the game of choice for wealth creation and retirement planning, especially in this country.
And dare I say, we've had the same cycle of different things that happen in these cycles, but it's the same thing that happens every 10, 12 years.
It'll happen again. I think I said it yesterday. It'll happen again.
So, without reading any books or anything, I think it's go by the history of what's happened in the past. So, that's it.
Good on you, buddy. Thanks.
Well, there you go. Hopefully you enjoyed those little words of wisdom with Travis, Paz, and John. Again, I just want to say before we wrap up, I really enjoy bringing these webinars to you. I hope you get a lot of knowledge out of them. We're all looking for answers in this current environment, and I'm not saying that we have all the answers, but, like I've always said all along over the last few weeks, this is something that, has affected every single person, all 7 billion of us on planet Earth. And no industry, no household has escaped this, okay? So, but what we need to look at is how we're going to get through it as opposed to just sitting there and dwelling on where we're at right now. So there's a lot of negativity out there. Some of the information, guys, is accurate, but not everything you're watching, listening to, or hearing is 100% correct either. So keep that in mind, okay? One thing I've learnt from following the media like yourselves, it's never as bad as what they tell you, and it's never as good as what they tell you. All right, the truth kind of sits somewhere in the middle. So hopefully you can take away a lot of information from what we've gone over the last half an hour, 40 minutes or so, and use it to better your life in the area of money, finance, motivation, business, and just what's going on in your household there, okay? Because we are going to get through this, and again, sooner rather than later. And I want each and every one of you guys that have seen me do this before to really come out much, much further ahead. You know, the success stories that our clients are sharing and some of the case studies that I'm going to bring to you in the coming weeks are nothing short of incredible. And we've got some great guest speakers coming up in the area of property management, because that's an area that I get asked about quite a lot. You know, Anthony, I've got a property portfolio. How is property management and how are tenants are going to affect my investment strategy, my cash flow? You know, what happens if my tenants can't pay because they lose their job? What happens if I invest in real estate but can't get a tenant? You know, how does that affect my cash flow? How does that affect my insurance? What are the banks? How are the banks going to react? So there's a lot of unanswered questions in this area. I'm also going to share with you, give you an update on the stimulus packages and the incentives that our governments are putting together in our industry, especially in the area of finance and real estate investment. You know, again, we're looking at stamp duty. If you're in Victoria, we're looking at stamp duty right now and potentially abolishing that, okay? That's got some pluses and some negatives. So stay tuned, guys. Keep tuning in. I love the feedback. Thank you so much for all your feedback and all your questions. Like I said, we've got some amazing guests coming up. But the one thing I want to leave you with is to stay positive. Know that things are certainly getting better, not getting worse, certainly getting better. And reach out and communicate. And that's the most important thing. Reach out and communicate. And, you know, life is there to be lived, okay? So make sure you're living life. We'll see you soon.